Has someone ever told you that you should start investing in stocks so your money can grow and not lose its value? Don't really understand what investing is all about? Let's explain it simply and quickly. The stock market is a system where shares, that is, securities representing ownership in a company, are traded. When an investor buys a share, they become a shareholder, which means they have the right to participate in the company's profits, for example, through dividends, and also have voting rights at the company's general meeting. The price of a share constantly changes depending on supply and demand. In other words, how many investors are willing to buy or sell that share at a given time. A stock's value is influenced by several factors, mainly a company's financial performance, expectations for future growth, interest rates, inflation, political stability, and the overall state of the economy. The stock market therefore reflects thousands of investors' opinions about the future of different companies, and from these opinions emerges the market price of each share. This process is known as price discovery. Stock trading takes place on stock exchanges, which are organized markets, such as the New York Stock Exchange, NYSE, NASDAQ, or the Bratislava Stock Exchange, BCPB. Each exchange has its own trading hours, rules, and regulatory bodies that ensure transparency and fairness. The main types of market participants are long-term investors, who buy shares intending to hold them for years, benefiting from value growth and dividends, and speculators or traders, who aim to profit from short-term price fluctuations. Investors use various strategies, for instance, fundamental analysis, which evaluates a company's financial indicators, like profit, revenue, or debt, or technical analysis, which focuses on price charts and market trends. The stock market is an essential part of the capital market, helping companies raise funds for growth. For example, through an initial public offering, IPO, when a company offers its shares to the public for the first time. For investors, it represents an opportunity to grow their capital, though it also involves a certain level of risk and volatility, meaning that prices can rise and fall unpredictably. Simply put, the stock market functions as a large, organized marketplace of confidence. When investors believe companies and the economy will do well, they buy and prices rise. When they lose confidence, they sell and prices fall. Over the long term, however, stock markets tend to grow as they reflect increasing productivity, innovation, and corporate profitability within the economy. Thank you for watching. If there's something specific you'd like to know more about, leave a comment. It might be the topic of my next video. Thanks for every like, comment, and subscription.